Good afternoon, ladies and gentlemen. It is Monday, the 19th of September, 2022. Welcome to Hindsight, where we learn to be a better trader. I'm going to take a look at the trades that I've taken for today and see what the lessons are learned in order to be a better trader in the future. What we have here is a stock ticker NYM. On the daily chart, there's a horizontal here at 19 cents. And as you can see, it plays a pretty key role as it opens up at 19 cents, has a high volume day, rallies, but it ends up closing at the lows for today at 17 cents. So fundamentally speaking, this is was a 5.8 million market cap company. It has shares on issue of around 30 to 35 million, I believe it was. So super ultra low shares on issue. And despite the fact that there was low shares on issue, you can see there's a bit of liquidity that happened in the last few weeks. So that made the order book nice and thick on the sell side, and not thick in a bad way, but I'm talking about not having any gaps on the sell side. So it's not super gappy, it's not intimidating to trade, which is really good for a low share on issue stock, generally speaking, because it enables people with more confidence to wipe lines and push a stock to the upside. On the intraday, we're going to take a look. It opened up here at 19 cents, and the order book was actually pretty garbage on match. It had like, I think, negative 50k shares at 19. It was looking healthy at one point, came off, and then eventually it's, there was about 180k shares, I think, at 20 cents, which I helped lift and then added on. I can't remember if it was 19.5 or 19, but I wanted the double bottom play basically. So let's just call it 19.5 for argument's sake. And the idea was to catch the pullback on what I thought was a really strong announcement, and catch the pullback and wait for it to rally. And the target I had in mind was about 30 cents on this one. And that was a first target as well, because my interpretation of the announcement was different to the reality. So we'll go over that a little bit more a little bit later on. So 5 mil market cap, 3.9 million cash in the bank approximately. So 1.1 EV. And yeah, so the idea was to take this to around 15 mil market cap ideally. And the idea was 15 mil at the absolute minimum today, and then push more like 20 to 25 for tomorrow, because I believe that the announcement that I was reading was not historical drill results, but fresh drill results. So I opened up the announcement, and on page 1, we've got NYM identifies significant REE project at Rock Gully. I see that there's significant mineralization across a 1.5 kilometer strike. And then I see these grades here at 32 meters at almost 1500 parts per million, 32 at 1100, 20 at 1400, 20 at 1200, and 40 at just under 1000 parts per million. Now, these grades for TREOs, I'm still learning about what is considered a significant announcement. And I find 1500 is a number that really moves a stock, especially when it's under 20 mil market cap. 1000 is kind of where things don't get ignored, but 1500 is enough to push a stock. And it's really nice to see 32 meters of the actual intercept, right? 32 meters of anything is nice, even if it's like low grade gold. If you got lots of intercepts that are thick, then it's still viable. It's still, potentially mineable and potentially profitable. But what we have here is, a solid grade and a solid intercept. And it's shallow as well, 16 meters. Like, you may as well dig that with a shovel. So in my head, I'm looking at a multi-bagger here. Like, practically guaranteed in my head is what I'm thinking of this stock. What I don't realize is that it is historic exploration drilling that shows this mineralization. You might be wondering, well, what difference does it make if it's historical or if it's fresh? Because ultimately you have the same thing in the ground. The only thing is the time difference. The answer for that is I don't know. I really don't know why the market values fresh drill results over historical. My assumption is that, and this is one explanation I've heard, is that old drilling uses old techniques that are less reliable and less accurate. And I don't know how much I buy into that, but at the same time, I also don't care, because if the market doesn't care, I don't care either, because it's not going to make me money. So whether debating historical versus fresh, you can have that debate all you want, but the market doesn't care. So there's no point even discussing it, really. And this is the key differentiator between making money and not making money on an announcement like this, is understanding if it's historical or not. And you can see that the stock rallies and then it comes off. This, like, at the end of the day, you can see that the market doesn't care. NYM drops back below where it opened, and this is back to being a $5 million company. And it's got these stellar looking hits of rare earths. So I don't need to tell you that the market doesn't care. The proof's in the pudding. And I guess what happened for me was I sort of read the dot points here. I didn't do my due diligence and read the entire announcement. And I kind of just scroll down and I'm skimming things. I'm looking for keywords. And, you know, I'm looking at this table here. Drill intersect, significant drill holes. Okay, cool. I'm not seeing the word historical. I'm not seeing like 2007 drill hits or anything like that. I'm not seeing anything that tells me that this is not fresh drill results. And, you know, it's on part me being a little bit lazy and not spotting this, but ultimately I scroll down, I say, oh, cool. Rock Gully results, drill results, cool, assay results. Here are the trios, here are the hits, here's the drill core. Nothing to reference that this was an old historical hit, except one page up where it says the date that it was started. So 2010, by the looks of it. So that really comes down on my due diligence. Maybe I could just next time hit Control F and look up the word histor. I just look for the word historical, history or historic. And that would have perhaps saved me. Actually, not saved me, but I wouldn't have given back profits today, ultimately. So NYM, you can see it opened up here at 19 that I was talking about. It opened up right on this candle here. It didn't look good on the match. I took it as it was pushing to the upside. Caught it on the way back. I can't remember if it was 19.5 or 19, but I caught the pullback because double bottoming is a thing as of like the last 9 months. And then it rallied. There's this breaker range here as well. So the range is between 19 and 21. That's the opening range. And in my eyes, this is going a little bit slow. Comes back, and then the breakout is on. So for me, this is like hands off, let this thing do its magic. I'm looking for a push well above 24 cents, which was the high. It comes back down, and if I bring up VWAP, we can see it kind of comes back down to VWAP. I'm thinking, that's fine. That's okay, cool. The next leg up is going to retest 24, maybe like 1 or 2 ticks back, and break out into highs and hit that sort of 30-cent first target that I was anticipating, based on my assumption that this was a fresh drill result. Instead, it starts coming off. I start reading the announcement again because I'm wondering what the fuck is going on. And of course, I just start breaking even because I'm not going to take a loss on this thing. And ultimately, this is the trigger point as well. High volume sell below VWAP. There is exactly, I shouldn't say that. There is almost exactly 0% chance that this does a near triple bottom on a high volume sell below VWAP to retest 24 and then start going up. Like, that just doesn't happen. That's not how trading works. You know, rallying, break range, coming back, triple bottoming, that just doesn't happen, right? So there's no choice but to start bailing out and breaking even. And really what it comes down to is due diligence, not reading that announcement properly. Would I still have traded it if I knew that it was a historical drill result? I actually probably would have, because it's still a 5 mil market cap company, but I certainly would not have held on to it beyond the range break. All right, you get the range break, and then it's just get the fuck out wherever you can, or rather wherever I can. But I don't trade historical drill results typically. This one looked a little bit special because, again, 5 mil market cap for a very, very good looking assays. And I suspect the people that were buying here saw the same thing that I saw, and that is just this part here. Assuming that it was fresh drill intercepts, because this, if these were fresh, I believe that this really would push to 15 mil market cap at an absolute minimum. So it is what it is. Hopefully a lesson for myself in the future, and maybe you guys may have learned something. It's definitely worth paying attention to for the future, is fresh versus historical. Otherwise, guys, I'll catch you in the next video. Cheers.